if we give it to 12:05 and then we kickstart, Wayne.
So we'll just give a couple more minutes for anybody other join us, and then we can get going. Right, I think we can go now, Carl.
It's funny how a minute takes an hour when minutes fly by, but when you actually got to wait for one, it goes very, very slow. Right, I hope we got everyone in the room. I'm sure there'll probably be a few more people joining. So if anyone's got any questions or anything else, then please feel free to just put on the notes. So right, so first of all, thank you very much for taking your time out on your lunch to come and join me and Wayne today. Hopefully you're going to find this insightful, and hopefully it's getting you where to go to help your clients. Just to do a little bit of housekeeping before we start the slides. This webinar is recorded and it'll be available after this session for you guys to have. I believe it's to be sent out. Microphones will be muted while the session is going on, and then at the end we'll of course do a Q&A session. If you would like any more information, call after this, then please contact us, and we'll contact you afterwards to have them discussions. Wayne will give out the details at the end of the slide. So do a bit of introduction first. I'm going to introduce Wayne.
Hi, good afternoon. My name's Wayne. I'm a lead for Unoccupied Direct Products. I've been with Vasek Insurance now for 9 years as a business development manager, and I've actually got 19 plus years within the insurance industry, mainly within the property side of the business. So I'll hand you back over to Carl.
Yeah, I'm Carl Webster. I've been at Vasek now for just come up to 4 years. And I've been in the property market for just over 10, and I help out with the UD side of things when needed. So I'm going to kickstart. So what we're looking to do today is called broaden your horizon, help you understand, see what's right for your client, but also as well as taking on a journey to see what it looks like from the start, and how can we then help you guys. So what we're going to do is talk a little bit about ourselves and what makes us stand out, and then look at what a client looks like, what property looks like as well, talk about some claims, look at the risk insight, and a deep dive into our product. Wayne's going to go into the nitty gritty halfway through this. So if we start on looking at the client profile, Vasek. So, Vasek. So, what we like to do is, when speaking to clients, no one's going to know who Vasek is. We're not a high street brand. So, some of the challenges that you will have is when you're recommending a provider is actually, who are we, and what strengths can you give behind that? So, Vasek was set up 28 years. We were set up to be a non-standard provider in the market. We are still that today. We purely specialise in non-standard proposition. We originally created just to do on occupancy, and then over the years, we've of course dipped our fingers into some other avenues. So why is that important then? So what that actually means is the fact that we've actually got the infrastructure. First of all, we've got the team that understands proposition. We've got the claims that understand it as well. And we've got loss adjusters that understand the proposition. And that's really important to your client to know that actually putting with someone like Vasek is they're going to be looked after in event of a claim, and they understand it. And at the end of the day, that is what your clients are paying for. They're paying for a claim service should the worst ever happen. We're based in Nottingham. As you can probably tell, I haven't got a Nottingham accent. That's because I'm based in the south. But we are owned, backed by Gallagher, which of course you've probably all seen the Gallagher Rugby. It's and you ever know who Gallagher is, they're a massive company, so we've got well-backed business. So what we want to do today, me and Wayne, was to go through what we're looking at today. So what does the client look like? Well, I don't want to tell you, the conversation the guys have, because you day in, day out, and so you're having these conversations with clients, so you're going to really relate to a lot of this. But what we wanted to do is take you through that journey to see actually what we're looking at and what we're actually doing today. So let's go through a client profile. So a family member and friend has passed away, moved into family or moved into care, funeral care arrangements. I don't know if anyone's had to deal with that, but I'm dealing with myself, and it's very stressful. Family politics, we all know what families can be like, and I'm sure a lot of you on this call today have some very much horror stories regarding family politics. Major lifetime event, it's probably the biggest one there, massive change in someone's life, losing someone or losing someone to care in some ways. Financial stresses, everyone always forgets when someone passes away or going into care, the financial burden, understanding their finances, going through paperwork and feeding through family members of actually putting someone's life together, and complexities of day-to-day tasks, apart from your own life, that you then have to sort out someone else's issues at the same time as well. So the reason why I wanted to bring this up is actually, if we look at that list, what does it actually scream out? Well, what it screams out is a vulnerable client. And one thing that we have to do in our own training and sessions, and something we have to do with our CPD, is look at and understand what a vulnerable client looks like. And the reason why it's important is because vulnerable clients will make quick, uneducated decisions. They will take out an insurance policy that sometimes is not actually required or actually not even needed for that risk itself. They've just taken it out because it's just a piece of paper. And that's why what we wanted to do today is, of course, help educate you of what that actually looks like, and actually help you and your client understand that actually what a risk looks like and why it's important. That leads me nicely into my next slide. The property itself. Now, we all know that some of the biggest assets, actually sometimes it's the only asset, is the property itself. It's bigger than life insurance, it's bigger than critical illness, it's bigger than some investments that you have. But we spend half of our life, well, most of our lives, that's to be fair, in some cases, actually paying for property or properties. So why is the insurance an afterthought? Well, I guess it's everything. We all think of anything. No one likes to pay insurance policies. No one likes to pay for the car insurance. No one likes to pay for their own house insurance. It's or even property owners. It's always an afterthought. But when it goes wrong, then everyone then gets pipes up and turn around and says, well, why didn't I insure this properly in the first place? So the key things that we talk about when it comes down to looking at property is the fact that with the biggest asset, this is a short-term policy. This is looking after a massive asset while a situation is going on. And at the end of it, what you want to do is you want to make sure that the property is insured correctly. And what does that look like in event of a claim? Well, if you're insuring a property at £450,000 and then you have an 80 grand claim, then does the family actually have £80,000 in the back burner to pay for the property to be up and running, ready for sale? We hear a lot about costs. I hear always a lot about costs when it comes down to insurance. Family can't afford it, anything else. And I would like you to sit there and turn around and say, well, if we don't insure this right, then actually, do you have enough money in the bank to pay for it when it goes wrong? 9 out of 10, the family don't have that kind of money. So what does that look like from a claims point of view then? So what we've done here is just looked at some key trends and statistics in the industry, so and figures for myself. So as you can tell, that quite some big numbers there. Like 2005, I mean, it's astonishing the amount of unoccupancy properties there are out there, but of course we all know how expensive care is these days as well, and some people have to fund that. I remember looking at properties last year, and one of the properties I went to go and see, the owner is actually in the property, and there was just having a chat in the kitchen. It was like, why is the property up for sale? And the first thing he said is, my wife is in care just around the corner. We haven't got enough money, and we've been told we need to sell the house, or it's an option to sell the house. So that was a very disheartening conversation, having someone's kitchen. But unfortunately, that's just the reality of life. But as you can see, the claims on here is, one of the largest claims, just to £5 million. And an average claim of £15,000. Just the family have that finance in the background should it goes wrong. And don't forget, the family are not expecting to receive this kind of money. I mean, we had a situation last year when I went out to go and see one of my brokers, and was just talking about probate, and he actually had one of his clients got sued by the family member. Basically what happened was the insurance wasn't correctly in place. They had a total loss. The insurance company refused to pay out an event of a claim, and the family didn't receive the money. I believe the value of the property, what he's interpreted, was the property was valued at 1.2 million. So that would have been a massive burden to the family. Right, so what I've done today is we've looked at the profiling, we've looked at the client profile, what the property profile is. Now what we're going to do now is I'm going to pass you over to Wayne, and Wayne's going to go to nitty gritty on covers and claims and what we can do for you.
Thanks so much, Cole. So unoccupied properties present unique risks that can lead to significant financial and operational challenges. So we're just going to go through and highlight some of those risks associated with the properties. Theft and burglary. Obviously, with the theft, it's going to be an increased risk, as there's no one present to deter intruders at the property. And it's not just the contents which could be stolen at the property, could also be copper wiring and pipes, fixtures and appliances. You're then looking at vandalism, so that can range from graffiti and broken windows. Again, it can lead to costly repairs, but also a decline in the actual property value. Fire is always going to be a risk for any property, but in relation to an unoccupied property, those fault risks are greater. Obviously, there's arson, which is still fire, even though it's been set by somebody deliberately, but there could also be electrical faults or other issues arising at the property. And again, it's unattended, so there's nobody there to actually hear the fire alarm going off, and will often result in complete loss of the property. Water damage, again, goes unnoticed for extended periods, so the bills or claims can range from a couple of thousands to tens of thousands of pounds in relation to water damage, depending on obviously how long it goes unnoticed for and the extent of the actual water damage. You've then also got weather-related damages, so that could be anything from tiles blowing off roofs, or it could be just general sort of excessive rainfall. But again, if obviously there is damages at the property, then it could lead to further issues like structural damage, especially if the property isn't maintained. Then also got trespassing and illegal activities. So again, as nobody's there, you don't have control of who's accessing the property or entering the grounds of the property. So again, there's that additional sort of risk. Finally, we're going to look at the insurance challenges. So making sure that obviously you've got the right cover in place for the actual property. So that's one of the first questions you should be actually asking yourselves when the case or the client comes to visit you is the current actual cover in force suitable for the property? Is there even insurance cover in place? Sometimes there is going to be cases where there's no cover actually in force, and then it's going to be a requirement to go and source a specialist on occupied property for the actual property. The existing cover, in some cases the existing cover provider is actually going to be willing to continue with cover up until the renewal date normally. One of the first things they do, though, is advise that contents cover can no longer be provided at the point where you notify them that the owner has either passed away or moved into care. But it's also worth noting at this point that if they are willing to continue with cover, a home owner occupier policy is not actually designed for long periods of cover. And due to that, what happens is the cover is often restricted by the actual standard terms and conditions of the policy, and it's restricted down to what's known within the industry as FLEA cover, and that's fire, lightning, explosion, or aircraft, or explosion, depending on obviously how you're spelling FLEA. So one of the things that you need to do in relation to sort of determine whether or not your property is classed as unoccupied or empty is look at the policy wording. Within the policy wording, you'll find a definitions section, and it's included in most policy, and that essentially does detail what is meant by different terms within the policy. And there'll be a section there which says what it's classed as whether it's empty or unoccupied. From there, you can go through to the perils section on the policy. Quite often when you're looking at the perils section, and that's sort of what's covered and what's not covered by the policy, you'll have two columns. The left-hand column normally is what's covered, and the right-hand column details what is being excluded under certain circumstances. And next to stuff like your theft, malicious damage, escape of water, escape of oil, it'll often have unless classed as empty or unoccupied. So that's where you need to look at, obviously, for that. If you are sourcing an alternative provider for the unoccupied property, there's a couple of options normally available within the market. One of them, again, is FLEA cover. It's often offered as an occupied property cover, but there can also be higher levels of cover available in the market. But it's important to look at the policy wording and the terms and conditions of the provider so that you can obviously ensure that you adhere to them. Could be inspections on a weekly basis, every 14 days or once a month for either certain periods of the year or for the entirety of the policy. There may also be drain down clauses or heating clauses as well included in those options. And again, there could be higher excesses for different types of claims. Again, escape of water and subsidence are those ones to look at as to what's actually going to be imposed. So we'll move on to a deep dive now into Unoccupied Direct and the property and the product, and why hopefully you'd choose us as a provider going forward. Unoccupied Direct is designed specifically for when the owner has either passed away or moved into care or family member, and it's not actually suitable for general unoccupied properties. So if your property is being purchased and it needs renovation, or it's in between tenancies, or it's a second home which is empty, this is not the right product. It's only available for those specific circumstances. We do have a general unoccupied property with Vasek, and there's a couple of different levels of cover available with ourselves if it falls outside of these circumstances. So we've gone through some of the risks posed to unoccupied properties, and now we're going to go through some of the key benefits of Unoccupied Direct as a cover provider. So we've tried to streamline the process and make it as user-friendly as possible. We only actually have 5 questions to actually obtain a quote and go on cover. So we ask for the address of the property, number of bedrooms, approximate year of build, and also if there is a water tank at the property. Don't worry if you don't know whether there's a water tank at the property. There is also an option of I don't know. So it does still enable you to go through, get a quote and a price, and then proceed to cover. And you can always update us at a later date once you have that information. So as you can notice, there's no arduous underwriting questions there. So we're not asking for your previous claims history, percentages of flat roofs, We're not also asking you to confirm whether your lock's confirmed to BS3621 and whether all those locks are actually engaged at the property. When you're going through the quote process, we also give you the ability to add your case reference number onto the actual policy, and that comes through on all of your documents right the way through all of the communications to again make it really easy for you to identify any communication that's being sent to you. We do also provide an option for solicitors in relation to a credit account. So that enables you to bypass the need for immediate payment when setting up a policy or renewing a policy. Unlike when obviously you place cover via a broker, often you need to get that payment to them within 14 days or the holding cover will actually cease. You can also have as many users as you require for the actual office, so everybody can have access, all the fee earners can access it as and when required, and then we also have centralised renewals and monthly billing. So when you've placed the coverage, you get a invoice with the actual client, with the documents when they're issued, and they're normally issued within 24 to 72 hours of placement. You can organise payment at that stage, however you don't need to. End of the month, we'll send a further month invoice that details all of the payment or policies that you've placed with us, and then you get a further 28 days to actually organise the payment, giving you a bit more breathing space to organise cash flows. So looking at some of the other features and levels of cover which are included as standard, we offer £1 million worth of buildings insurance as standard and up to a maximum of 7 bedrooms. That's going to sort of take care of the majority of properties that you're looking to insure. However, you still do need to be asking that question as to whether or not £1 million is sufficient. There will be cases where you've got extensive outbuildings like multiple garages, workshops, stables, or the property's built of some sort of some sort of stone that you're not able to source easily, and we're not actually asking you to provide us with a rebuild or reinstatement value. If you are providing rebuild or reinstatement values to obtain quotes, then it is putting yourself and your client at a massive risk. I work within the insurance industry, and if you ask me to sort of guess or estimate what a rebuild value is, I wouldn't like to hazard a guess. The only people that can really sort of give you an accurate rebuild value is a surveyor. So we also provide contents cover at £10,000 as standard with the product as well. You can also increase that sum insured as and when required, and the maximum sum insured we can provide is £110,000. And again, it's worthwhile asking whether or not that £10,000 is actually sufficient to replace the contents of the property. Could you actually replace all the carpets throughout a property for £10,000? In some cases, I would possibly say no. But it's important to insure them for the value that you require. You've got all your liability covers included also on the policy as standard. So you've got your £10 million property owners liability, £5 million legal liability, and then £10 million accidents to domestic staff liability. So if the worst was to happen and there was some sort of accident or incident by a member of the public, you've got that protection there to help protect you. One final thing that I forgot to mention on the contents cover as well, we do actually also cover for valuables up to 25% of the sum insured. So that's like gold, silver, silver plated articles like jewellery, etc., furs, and also fine art. So those items could be covered in the property. And it's a far nicer conversation to have with your client that, look, we can insure it for the correct value at the property. You can go away, deal with the funeral and grieving process, or organising the actual care that is required for your client. Far nicer conversation than you need to clear the property as quick as possible, or those items just aren't covered. Obviously, we cover for all the main perils as well, like fire, lightning, earthquake, explosion and aircraft. We also offer subsidence and also flood cover as standard, regardless of where the property is actually situated as well. So it could be in a high flood risk area, or an increased risk of subsidence due to the fact that it's in a ex-mining area or something like that, and those items might be covered or excluded from some policy providers if that is the case. We do have a heating clause on our policy. It's a heating or drain down clause though, so you get to make the decision as to which is the best option for you. It's only in force from the 1st of October through to the 31st of March, and where the entire premises has the benefit of gas or oil fired central heating, and you've got automatic controls and a separate thermostat, you can set it to 12 degrees or higher. I would personally suggest it to be set higher than 12 degrees just to try and remove that risk of freezing of pipes at the property. Obviously though, if you do decide, you can do a drain down at the property, and within our policy wording you can actually get hints and tips of how to complete a full or mini drain down at the property. If you do decide to actually heat the property though, you do need to prop your loft hatch open by 30 inches or 12 inches, sorry, or 30 centimetres. Easiest thing to do is just pop a ruler in that gap and use that to prop it open. But as I said, it's your decision, and you may make a different choice with different properties. You might be really sort of confident in the heating of the property, or you've got a water tank at the property, and to help reduce that risk of damage actually occurring at the property, you might take the decision that draining down the property is the better option. One of the other major differences between ourselves and other providers, and I'm not actually aware of any other provider in the market offering this element, is our guarantee of insurance. So this means that essentially when you're going through that quote process and we're asking for those 5 pieces of information relating to the property, if you do get one of the pieces of information unintentionally correct, we'll not hold it against you or your client, and we'll actually deal with the claim accordingly. Again, that's helping to reduce the risk of potential professional indemnity claims against you and your firm. Please do see our policy wording for full terms and conditions, and also the schedule of cover as well. So as we went through, obviously the additional risk profile for the perils which obviously occur at properties. This is the most common claims for Unoccupied Direct. So this is on this product, and this data is from 2017 through to December 2024. We've excluded 2025 as that's classed as live data currently, as we've got ongoing claims on that policy. As you can see, the biggest claims are for escape of water at 40% of all claims. And then you've got theft at 9%, malicious damage at 11%, storm damage 20% of all claims, accidental damage at 6%. Surprised to see accidental damage in there, but at the end of the day, when those properties are being cleared, it's often by people which aren't professionals, and accidents are going to happen. If you're up in the loft space, you might miss one of the bracing struts and put your foot through the ceiling. That's an accident, didn't mean to do it, and that's where your accidental damage comes in. And other covers all your other things like collision by aircraft or vehicles and subsidence, etc. as well. As you can see though, fire, theft, flea cover, fire, lightning, earthquake and aircraft or explosion doesn't come in the top sort of claims and most common causes of claims for unoccupied properties. So it's vital that you're getting the right cover in place at the right time. We do have an internal claims team as well, not only dealing with the smaller claims, but also when you've got a larger claim that needs dealing with, we can send a loss adjuster out, and they've got a £10,000 limit where they're able to authorise that on the day there for you. They're really experienced, know the product obviously in and out, and should be able to go push the claim through as quick as possible for you. So we'll open the floor up now to any questions, and hopefully we've got some come through.
Anyone doesn't want to speak, you can also put it in the message box. I'll gladly read it out. Wayne, I've got a couple of questions while everyone gets their thoughts together that we got emailed through from our last event that we went to. One of the questions was, how does the refunds work?
So we offer 3, 6, 9 and 12-month policy options, and we can, I always recommend to all of my clients to take out the 9 or 12-month policy option, just due to the fact that we offer a pro rata refund for those types of policies. The 3 and 6 month policies are just one-off payments, and there is no return premium on those, regardless of whether the full terms required. So always look towards the 9 or 12. If you take a 9-month policy out and only use 1 month of it, we're going to look at refunding 8 months worth of premium, and there is no cancellation fee either.
If anyone's got any questions, by the way, if you press on the hand and let us know, and then we can unmute you while that's happening. I've got a few other questions, Wayne, that we asked for. Is the credit account, how long does it need to be paid, and is there any charge for that?
Yeah, so there's no actual charge for the credit account on a monthly basis, and you just pay for the amount which is shown on screen for the policy. So there's no sort of interest payments or anything like that on the actual amounts due. If you place a policy on the 1st of the month, you wouldn't actually get billed it until the next month, a couple of days into the next month, and then you get a further 28 days to organise payment. So technically you've got that 2-month gap period there to obviously organise payment, gain access to accounts, get payment from beneficiaries, or organise the payment from the firm.
We've got any questions so far, Wayne? I've got one last one. How easy is it to sign up? What's the process?
So if you drop me an email, either directly or to the contact email, which I'll give you in a couple of minutes, we can go through and check that you've got your SRA number, and it's a matter of minutes. You can put the application forward in the morning, and by the afternoon you should have it in place at the end of the day and be able to start placing business. Okay, well, as we don't seem to have any additional questions coming through, we'll just go through to the next bit there for you. So a couple of learning outcomes. You have a clear understanding of the client profile and the importance of ensuring unoccupied property is covered adequately and protect you or your clients. You also have an understanding of the policy exclusions and limitations and where to find the information within the policy wording. You also understand some of the most common claims for unoccupied properties and how you can reduce the risks being posed. And finally, hopefully you've now got a clearer understanding of how Unoccupied Direct works and the key benefits and features of the covers, and hopefully how that can also help you and your clients going forward. So I'd just like to thank you all for joining us today for our Lunch and Learn session. Hopefully you found that useful. If you do have any questions afterwards, please do just send it over to contact@vasek.co.uk, and we'll get those responses sent out to you as well. We're also more than happy to organise a further conversation if you've got any further questions. We do also have a live chat facility on the website, again, so you can answer any questions as you go through. Anything more from yourself, Carl?
No, again, just to keep that. Thank you very much for everyone's time. But yeah, don't be shy. If you do have any questions, we are always here to help.
All right. Well, thanks very much for your time today. Cheers.
Bye, everyone. Thank you. Here we are, mate.